The following is a special presentation of Tony Kurre Radio with Dr. Alex Heublein and Dr. Josh Klapow. This is Adapt or Perish.
Welcome to Adapt or Perish. I am Dr. Josh Klapow along with Dr. Alex Heublein, president of Adaptogent. And today we have a special guest all the way from London, England, where it was very hot and it is not as hot anymore. We have Biju Suresh Babu who's joining us. Today's topic is banking. Now, when we picked that topic, I kind of went, But what I want you to know is we are going to be talking about parts of banking that whether you're in business or you're just a consumer, you're running a big corporation or you're running a small business, there are so many aspects to business of banking that are just really not known to most of us. And the music that we picked today, there really was only one song that we could pick, Money for Nothing and the Chicks for Free. Dire Straits. And although Alex, you and I we came up with a few other ones, right?
Yeah, we did.
But this is good. Now listen, Alex and Biju are friends, are colleagues. Biju is the managing director of banking and financial services for Fiorano and is based out of London. He has over 20 years of experience in digital transformation. He is a banking expert. And again, Alex, I know you and Biju are friends and colleagues, so I'm going to let you kind of kick it off and broaden the topic as we get into this banking, current states and future states.
Perfect, man. Yeah, I don't know. I don't know about the Chicks for Free part, but
I had to say it.
The song, but I guess that's not politically correct to say stuff like that.
It is absolutely not.
But it's okay. So there you go. Right. What can you do? But yeah, no, Biju, thanks for joining us, man. Really appreciate you having you on the show. And when, like Dr. Josh was saying, when we were talking about this topic, I mean, most people, when they think of banking, or at least I certainly do, I think of a bunch of white collar workers in a big building in suits and counting money and stuff. It doesn't sound like a particularly sexy topic, but I think there's a lot that's happening in the banking world. I mean, we've all seen sort of the rise of mobile banking over the last few years, and that's been really cool because I haven't set foot in an actual bank in. I can't even remember the last time I actually went into a bank and talked to a teller or whatever. It's all done over my phone. It's all done on the computer. And, obviously there's a lot of advantages to that, maybe some disadvantages, but it seems like there's a lot more happening in the world of banking than most people are aware of, kind of outside of the consumer-based aspects of it. Maybe give us a little overview of what you're seeing out there in the market. What kinds of changes are happening in the banking world? And then maybe we can dive into some of those specific changes.
Of course. So Alex, Dr. Josh, thanks for having me. Pleasure to be here. I'm really excited about this podcast. And I think you touched upon a good point, right? So banking as it is not incredibly sexy, but managing money is. Right, for a lot of people. And there's a number of forces at play right now. And depending on where you are in the world, the impact of these things you'll be able to see in different levels. But in general, there's a set of changes that are coming that are pretty global, right? So on the one hand, you've got the rise of fintechs, right? So 10 years ago, any interaction you do with your money in terms of managing that money, whether it's for a loan or for as investment, would be quite exclusively with your bank. And Alex, like you mentioned, traditionally most of us have grown up going to branches for banking. That's gone, right? And I'll cover that in a bit also. But branch banking is going out the window. Most countries, there's almost a complete stop to branches coming up. New ones for sure. Many branches are being shut all over the world. Fintechs have come into the space. So And a lot of this started with PSD2 in Europe, which was a regulation that really kickstarted a lot of the innovation that's required in banking. But if you coming back to what are the big forces at play, one is the rise of the fintechs, and that's a new type of competitor to traditional banks.
So Biju,
okay.
What's a fintech? Explain, because I don't think most of our listeners have any idea what a fintech
wait, not most
is.
of our listeners. Talk about what your co-host. I was waiting. I was hoping. I was like, okay, he's going to say it. He's going to define it. All right, and thank you, Alex, because thank you. Yes, Biju, what's a fintech?
I'm so sorry, right? So that's just me taking things for granted. So a fintech is a tech company that gets involved in financial services, or a financial services tech company. Now, there are different types of them. There are small fintechs who could be a 10-man company which got a great idea, and it could be an idea to launch a micro loan kind of product, or it can be a big tech company. But the whole principle of the fintech is a technology-powered financial services company. And normally the fintech market is quite filled with startups. So it's smart guys who have got an idea that they can do something in the financial services space, normally to help people manage their money better. And there are different types of these, right? So there are small to large ones. And, the large ones most of us know, but you know them as, we call them big techs. But a good example is Apple, right? Apple 15 years ago, Apple sold iPods and then phones. And then Apple slowly started their wallet program. Apple then launched an Apple Card. Apple, about a month and a half ago, launched their buy now, pay later scheme, which essentially is a loan, right? That's Apple offering finances. Apple started offering credit cards 3 years ago. So Apple is a great example of a tech firm, a big one, that's now offering financial services.
So Biju, all right. So I think that's a good definition. Like, I got one of those Apple cards 3 years ago when they came out, right? And I think my story kind of highlights some of the challenges maybe with some of the fintechs. So then I switched to Android, right? I said, you know what? I don't like Apple. And I'd used Apple stuff for like almost 40 years. And I finally said, you know what? I'm switching over. I want the open ecosystem. And then I couldn't figure out how to pay my Apple card. Like, if you don't have an Apple device, it's really, really tricky to pay your credit card. And so I missed a payment one time, and I literally couldn't figure out how to pay pay Apple, because I didn't have any more Apple devices anymore. I had to borrow my wife's phone. She's still on Apple, and so I had to pay it that way. So it sounds like that there are some great promises of the fintechs in terms of being able to provide new and differentiated services, but maybe also some challenges as these guys get off the ground and they start thinking through their business model. I mean, have you seen that in fintechs? Have you seen sort of there's great promise, but also potentially some downsides?
I mean, so it is. I mean, every business will have that, right? And so financial services used to be massively regulated. To be able to do anything, you had to go in with let's assume a big banking license, and that's expensive. It's complex. Whereas because a typical fintech classic category firm starts with a smaller level of license, which could be an e-money license, electronic money license, or a simple account information aggregation kind of license. The entry barriers are lower, and those lower entry barriers, I think, essentially pave the way for a lot of innovative thinking.
Gotcha. So now, some of us, I've heard this term sort of open banking over the last few years. And I think this is really something, if I'm not mistaken, was kind of mandated in the UK, that like the top 7 or 8 largest banks had to kind of open their systems up to fintechs and to consumers and others, so that it wasn't this sort of, walled off situation where, your money was in the bank, but you couldn't get to it anyway other than through the bank's apps or website or whatever. I mean, did that kind of did that move from a regulatory standpoint? Did that kind of drive a lot of the interest in fintechs and a lot of the startups, or was there something else that was kind of driving this?
So that did help massively, right? Because open banking in the UK is preceded by a regulation called PSD2, the Payment Services Directive 2, that was a Europe-specific regulation, and back then UK was part of EU right before Brexit. But PSD2 was a regulation introduced because regulators felt there was not enough innovation happening in the banking space, specifically to benefit customers, which is absolutely correct, right? Because like you said, banking has traditionally been very walled, and you could interact with your bank, your money was there, and your money was safe. But was your money working hard enough for you? Not necessarily. So open banking started based on the PSD2 regulation in Europe. And then when the UK took on PSD2, we looked at it and we kind of made things a little more stringent. We put on a little more security. We put in a little more governance around it. And that's what came to be called open banking. And so the UK led the world's market in open banking. We've been live for quite a few years now. It's been incredibly successful, not in terms of just a regulation being adopted, but in terms of the sheer impact on end consumers. I mean, there's massive benefits on display in day-to-day our lives because of open banking. And normally when this happens, the big banks who have got the large customer bases don't like it because they have to put in place technology. They have to bear the cost of compliance. And essentially what a bank is doing with open banking is spending time and spending money to share data with the right consent, of course, with the market. Based on that data, the market is being able to build better products and services for customers. But when we say the market can build better products and services, the market in many cases are going to be people who want to take that customer base away from the banks, right? And so on the one hand, the banks are stuck with the cost of compliance, but on the other, in spite of having to spend that time and money, what they're really achieving by just complying with open banking is facilitating their competitors, these new fintechs, right, to be able to offer better services to their own customers and take those customers away.
So let me jump in. Just two quick questions. One, a comment. I mean, this is classic for the title of our podcast. This is classic adapt or perish, right? Yeah. You although in some ways you're if you will, you're forced to adapt, but you don't want to perish. Can you walk us through, Biju? Maybe just you can either name companies or not. Examples. I've got a lot running through my head trying to understand, who are these fintechs, and I'm thinking in my mind, I'm thinking about how my bank account now can be connected to, direct ACH deposits. I can connect different banks I can get banks to my credit card, billing systems. I mean, things that are sort of take my bank and put it outside into other software applications. But maybe just walk us through some of the examples that you're talking about that are good for the consumer, maybe just one or two.
So, no, great point, Josh. So as an example, I bank in the UK with Barclays. Mm-hmm. Right. So Barclays was one of the first, they were part of the CMNI who were forced to implement open banking a few years ago when they started because they were one of the largest. Now, as an example, once I am, as an open banking consumer, once my account is connected up to a few different fintechs who I have given specific consent for my data to be shared with. So as an example, let's say as a consumer, I've got a check coming into my account. Let's assume I'm short of £1,000 or $1,000, right? My normal bank account, what you'll get is a message or a text that says, "Hey, Biju, we've got a check coming, you're short of money. We will hold this until 3 p.m. If you put the money in, we clear the check. Otherwise, it's your problem." Now, with open banking consent, when fintechs have got access to my account, imagine for a second, instead of that message coming in, let's say on a busy Monday morning, right? And I don't have time to bother about this for the next couple of hours. I'm busy in meetings. But instead of that message coming in saying, listen, you're short of money, right? You can put in money before 3 p.m. Instead of that, if I get a message from a fintech I have given consent to that says, Biju, you're short of money. We know you're short of £1,000. We'll give you £1,000. We're going to charge you, let's say, 20p a day. As that's all it's going to cost you. Do you want the money? Yes or no? The moment I say yes, that money goes to my account. The check clears. Now, what that fintech has done is they've created a microloan because they've offered a contextually relevant product to me at the time I want to. And they've been able to do that because I have given them access to my account data. Now, is that something, as an example, Barclays could have done? By the way, Barclays is great. I mean, I bank with them, they're fantastic. So, but is it something that a large incumbent bank could have done? Yes, they could have. But then different companies have got different financial, let's say, risk levels, right? So whereas a large bank may have looked at me and say, okay, all you want to do is tell him that you're short of money, whereas a fintech will look at it as an opportunity to offer me a new product that's contextually relevant. So what's changing essentially is that ability to offer consumers products and services that are timely and relevant to their situation in life. So the example I mentioned was a £1,000 check coming in, but my point is it can be a loan for college education. It could be a housing top loan. It could be anything.
That's fascinating.
Wow.
So one more quick question. So banks are, and Alex, this gets to what we've sort of talked about with big banking and being able to adapt with software, et cetera. What you just described, Biju, is a Barclays or other banks could do what you just described the fintech is doing. But for whatever reason, whether it's the technology, the risk, in many cases, they're choosing not to, and the fintech has popped up to sort of serve that need, but in many ways also take away that opportunity from the big banks, it sounds like. I mean, this is the competition here.
Exactly. And that's exactly what's happening, right? So Barclays is a great example of a bank that's actually turned around and is now massively also trying to leverage open banking to create those kind of services. So when we say fintech, a fintech is a financial services of a firm that offers financial services based on technology. So in the example I gave you earlier, the fintech could offer me a product at that point of time because they knew I was short of that money. They knew exactly how much I was short of. They knew how much I had in my bank. Because of open banking, they could check my credit profile. They could check whether I was a risky client or not, and then offer that loan. And they could do that instantly by using technology to create that contextual profile or contextual relevance of my profile and offer me that product. That's what the fintechs do. And again, so normally so when you see open banking come to a country as a first step, the normal response from most large banks is they don't want it because it is straight away a threat and a very big threat to their very fundamental way of doing business that's been working successfully for the last decade, for decades till now. The UK has, if I'm not wrong, about 340 odd active fintechs. It is the most active fintech market in the world from an open banking standpoint. Not that a lot of these services are not offered without open banking coming in as regulation, because you have a lot of these kind of services even in the US and Canada. But quite often these are done through something called screen scraping, where most customers, they're not necessarily aware of the extent of access they've given fintechs to their bank accounts.
Well, yeah, I was gonna ask.
Say that one more.
Right?
Say that one more time. Did you call that screen scraping?
Yes, screen scraping. So normally what happens is you can have a fintech, and you've got loads in the US, and a fintech can come up, offer you a product. You give them access to your account, but the way you do it is in the old school model with screen scraping. You essentially share your ID and password with the fintech, and you're hoping they are going to keep it safe. With open banking, you never do that. There's a very secure consent mechanism between the consumer, the bank, and the fintech, where consent is passed through very secure tokenized models. And this is where I think the word is slightly misleading, because some people misunderstand open banking as being open. So it is open, but it's not open as in insecure. It's open in terms of, the whole model is open to the ecosystem. And what we're seeing on this side is essentially open banking has become so successful, it's moving towards something called towards broader open finance. So it's the same principles of customer consented secure data sharing to other areas using open banking principles. And a good example is open insurance.
Okay. So that security model, that interaction model is, it sounds like it's working pretty well. Open banking sounds scary, I suspect, to the average consumer, right? They're thinking, whoa, wait a minute. That's the last thing I want. So let me ask you this. We've seen the disaster in the cryptocurrency markets over the last, I guess, 3 or 4 months. Tons of people lost their money. Tons of people are trying to get their money from a bunch of bankrupt cryptocurrency exchanges, et cetera. I think, from what I can gather, it was because there just wasn't a whole lot of regulation. Is open banking, are these fintechs regulated by the government so that they don't, do a bunch of stuff and then run off with your money or go bankrupt and you lose your money? What is the sort of regulatory landscape around the fintechs versus the banks that we know are already highly regulated?
That's a really good question. So as an example, I'm going to go back to UK, because UK is, as of now, the longest standing market in the world for open banking. And the UK model is being adopted by Australia, by Brazil. Canada is adopting open banking now. We believe it's coming to the US very soon also. But in summary, yes, fintechs are regulated. So in the UK, typically from an open banking standpoint, you've got three types of players. So you've got the bank, which publishes and holds customer data. You've got 2 types of fintechs. You've got one category, which is called an account information service provider, or an AISP. And an AISP does not have the ability to initiate payments. They can collect account information and offer better products based on that account information. So as an example, a good example can be aggregation of, let's say comparison sites, right? So if, for example, you've got your insurance coming up, what if you could get, based on your account history, lots of quotes of people fighting to give you the best product? And that's a good example of account aggregation, because what open banking can do is it can let anybody create a full view of your profile. So as an example, I have a bank account with, let's say, Barclays. And anyone looking at that account details will get some level of information about they can profile me to a certain extent based on my transaction history. Now, I also have a car loan. I have a mortgage on my house. I have a loan, let's say I have another account with HSBC. With open banking, if a fintech, instead of looking only at So with open banking, if a fintech, instead of looking at just one side of my account from Barclays, also can get to see what I do with HSBC, and my credit card history and my loan payment history on my, let's say, housing mortgage. That gives them a much better view of me as a financial service consumer. So that's one category, which is based on account information, and that has a lower level of regulation than banks. But the second category is what's called a PISP, a payment initiating service provider, which can, in addition to receiving account information, can also trigger payments, and that's kind of what gives you the full power. But both of these categories are absolutely regulated. It's easier to get a license as an AISP or a PISP than as a bank, but they're definitely regulated.
So this sounds like, and I'm going to go way back here, but back in the day, I used to use Quicken Right. And this thing would, you'd install it locally on your computer and it would go off and you'd tell it what all your bank account information was. And it would go off and pull different checking and savings accounts and credit card accounts. And like I could see it all in one place. And so it sounds like this is like the next generation, or at least the first scenario you talked about there. This is kind of like the next generation of that. I can see my whole financial portfolio, single pane of glass kind of thing. And that lets me potentially manage my finances better.
That's absolutely right. So it is the next generation, because a lot of what happened earlier was based on, like I said, screen scraping. You provide your credentials, and based on which data's gone and pulled back. Whereas that format has changed, and that's gone to tokenized consent-based data sharing. But in terms of that single pane of glass, yes, absolutely. And more importantly, what it offers you as a consumer, you and me, is better products and services, right? Because at the end of the day, if I've got, let's say, $1,000 in the bank, right, which is earning, let's say, 2% interest. Now, instead of that, if there's a fintech I actually trust, who can give me 2.5% or 3%, that's my money working for me. So at the end of the day, what we all want is better management of our financial lives.
Yeah.
Biju, let me ask you this: we've got a few minutes left, believe it or not. That went very fast. What are the concerns? If I'm a consumer, everything you've been discussing is both, it makes sense, and yet as a consumer, it kind of opens lots of questions in my mind around safety. I know Alex talked about regulation, but what am I looking for in terms of maybe a reliable a fintech, or what should we as the consumer be wary of, maybe not just now, but coming down the pipe in terms of safety, protection, security, all those sorts of things?
Very good point, Dr. Josh. And a lot of this is going to come down to the government's involvement, right? So in the UK, as an example, open banking is very regulated. There are some markets that are adopting open banking because the market is driving them to. So ideally, there are multiple players that are going to come up. So we spoke about banks and fintechs, but then you've got regulators, you've got trust frameworks, you have got security profiles. So now, I know the US does not have anything officially yet, but there is talk about the US, open banking coming to the US very, very soon.
We're always behind in that sort of thing, I feel like we're always way behind the curve on some.
So we like to present ourselves as being ahead.
Yeah, but we're like years behind the UK and stuff on things like open banking. It's almost embarrassing, really.
Well, from what we're hearing, it's coming and it's around the corner, and that could be a really, really good thing. But the critical bit is when that comes. I think the first thing that consumers need to look out for is the firm itself, right? And that's where I think what the government and regulators are going to do is going to matter. So, as an example, your neighbor Canada has been toying with it for a while. The initial plans were for them to go live right after UK, but there have been some delays. Now, finally, a few months ago, I know Canada has appointed a country lead for open banking, and his job is to essentially make sure that it's implemented in a way that benefits the country and consumers. But I think out of that, what's going to happen is that you'll have the right regulatory framework be defined that puts in place trust in the ecosystem, and that gives consumers the right checks and balances that they can verify before consenting, to and giving a fintech access to his or her account.
Right.
So in the UK, there were years of work that went into those frameworks to make sure that there was a proper trust model implemented before everything got released. Now, when you look at it right now from outside, all you get to see is the bank and fintech. But in the UK, there is a proper directory structure. There is an entity called the Open Banking Implementation Entity that sits in the center and essentially provides a common directory and trust framework between the bank and the fintech. And it lets So what that means is that unless a fintech is regulated, it cannot access my account. And let's assume I, as a consumer, gave a fintech access to my account, and let's say last month, right? They've got access, and today something's happened and they've been blacklisted. The moment that happens, the directory ecosystem will stop that fintech's access, which means the next time the fintech calls my bank API for my account details, it gets stopped. So there is a massive amount of work that's gone into the whole ecosystem to create a trust framework that is reliable and sustainable. And we're all waiting to see what that looks like in the US and Canada.
So let's go ahead, Dr. Josh.
Yeah, we're out of time. But I'll stretch. It's our show. Go ahead. Let's stretch it just a little bit.
My last question was kind of around payments, like real-time payments, and that seems like it's an area that really just in the last 3 or 4 years seems to have become very, very commonplace. Like my wife Venmos people all the time. And I'll admit this live on the air here. Like I still can't get Venmo to work on my damn phone. I mean, it's because it's an Android. It's because it's an Android. No, it's not because it's Android. I mean, like I have a degree in computer science and I run a software company, and like I can't work this thing out, right? But
dude, even I can figure out Venmo.
I guess I gotta like get you need to give me a tutorial or something on getting this. It always tells me it can't verify something or another. But like real-time payments seem like they're an area that is really taken off. And I've heard, so I think we've all seen sort of the consumer aspects of real-time payments, but then I heard about this company, I think they're actually based here in Atlanta, that was doing like real-time payments from employers to employees. So like, let's say you worked at Burger King or McDonald's or something, and you get paid hourly. They were able to pay their employees like minutes after they clocked out of their shift. They would get paid instead of having to wait till Friday or wait till the end of the month or whatever. Like they were getting real-time payments from a business to a consumer. I mean, what are the trends you're seeing there, Biju? Because I thought that one was really interesting, right? It's not just about sending money to your friends to pay for concert tickets or dinner or whatever. It was actually employers paying employees in pretty much real time as they did work for them. Where are you seeing payments going?
Another great question. So, well, as an example, so Venmo is probably a good example of a fintech, right? Actually, come to think of it. But coming back to your question, traditionally, most banks looked at banking and payments as separate areas, right? Because these were almost two very siloed out functions within a bank. We've mentioned PSD2 a few times already, and that's really the regulation that started it. So what PSD2, the full form of PSD2 is the Payment Services Directive. What PSD2 brought to the table is the ability for a fintech to trigger a payment. Now, the format of the payment is changing. So many of us in the past, we used to wait days for payments to happen, especially if you talk about cross-border international payments. That space is changing massively. So on the one hand, there's a nice merging happening between banking and payments. A lot of that has been triggered by PSD2. But instant payments is a fascinating space, right? There's a tremendous amount of innovation in the ability for a payment to be made and settled instantly. And if you look a little bit towards the east, towards places like India and Singapore and China, I mean the levels of innovation are astounding. Like I said, I live in UK. We've got a fantastic open banking market, but when I go to India, the speed and pace and volume at which payments are happening, and there are loads of reference case studies written on India's UPI model, right? I mean it's miles ahead of anything we have in the UK also. To come back to your point, you're right, Alex, there's a tremendous amount of innovation happening in the payment space, and instant payments is one of them. We're seeing something called request to pay coming in play, which is going to change a lot of things. There's a lot happening. We probably need another session to talk about that.
I was just going to say,
let's do another episode. We'll dive into that.
Absolutely. I mean, listen, I didn't even get into, as you were dabbling around the global nature of this. And because Alex, we've done a show on global partnerships, right? And having global connections in order to be successful in business. I think this is a perfect match. I do have to call time, unfortunately, on all of us. I'm going to be the bad person here. Biju, absolutely fascinating. We absolutely want to have you back. Lots to talk about. I definitely want to put a marker to talk about sort of the global nature of real-time payments, et cetera, just because of the differences in countries. And because Alex and I have talked over and over again that adaptation in the market means you have to think globally and you have to work globally. And I think this is a perfect example of where revenue and currency just becomes a huge issue. All that being said, I have to be the bad person to bring us to an end. Biju, thank you for joining us directly from London. You have a wonderful afternoon there. And for Alex and myself, I want to thank everybody for joining us for another segment of Adapt or Perish. Make sure you stay tuned to Tony Curry Radio, because that is when you're going to hear another amazing episode of Adapt or Perish.
This has been a special presentation of Tony Curry Radio.